What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. We are at 7,000 subscribers. You guys are fantastic. Make sure you smash that like button. I'm going to continue to produce at least 5 or more videos a week, so you got to hit that notification bell. So right now, I have 3 high-yield dividend stocks to buy now. These are new announcements, new dividend hike announcements that were just made in the past month before the year started, as well as this year. And they have consistent dividend increases. So I'll do a dividend stock analysis and stock analysis, do a little bit of review on the companies. So let's check this out right now. These guys have been making some news lately. Viatris, VTRS is a symbol. It's sitting at $15.01. Its previous close was 14.74. Its day range is 14.58 to 15.01. Its year range was 11.96 to 18.71. Its market cap was 18.5 billion US dollars. Its volume was 10.93 million. And its dividend yield is 3.20%. What makes these guys so exciting? So first, there's a 9% dividend increase. This is the 4th consecutive quarterly dividend. So Viatris today announced on January 4th its board of directors approved a 9% increase on its quarterly dividend, declared a dividend for the first quarter 2022 of 12 cents per share on outstanding common stock. At this quarterly dividend rate, subject to normal quarterly review by the BOD, the annual dividend rate for the fiscal year is 48 cents per share. So that's very exciting. So these guys were pretty much brand new. So I'll go over these guys just briefly. So some of the products that they carry that I think is really huge, Delanton, these are for seizures. People take that for seizures. And unfortunately, there are things out there with people getting seizures and they need medications like this, like phenytonin. Lipitor is huge. So that's a medication, that's a statin. So anybody that gets a heart attack or a stroke, they're pretty much given that per core measures and JNC 8. I am in nurse practitioner school. They're pounding JNC 8 in our head. So it's like if your LDL or HDL is fine, then all of a sudden they still give that to you if you get a heart attack or a stroke. So that's one thing just to be aware of. So people are having high cholesterol. They need statins unless you have like liver enzyme issues or muscle cramps getting it. That's a really good medication. Norvasc is a really good calcium channel blocker. They really heavily emphasize calcium channel blockers for African Americans. African Americans, based on research, have responded better to calcium channel blockers versus ACE inhibitors or angiotensin receptor blockers. So you'll notice, one of the big things, Norvasc 5 milligrams, you always start low and then go higher if needed, but that's a very popular medication. The other name for it is amlodipine. The nitrostat, that's kind of a given. That's a nitroglycerin, sublingual. Lyrica, so if you have nerve pain, sometimes people take Lyrica for sleep aids, but unfortunately, diabetes is high, so people get nerve pain. Gabapentin is another one that people take. Sometimes they use that for seizures. Rarely, that's not really a big seizure medication. Gabapentin's a big sleep aid, and sometimes people can give it to their dogs, and their pets. So they actually take that as well. I really don't even need to go into Viagra. I think we know what that is. So Geodon is a medication that helps people calm their nerves. That's a big medication that I've administered intramuscularly on patients, psych patients, or elderly patients who have like severe dementia. That's a big medication. It just calms people's nerves down. Unfortunately, mental health being higher, that medication is in demand. So I'm just going to go over a few of them. Creon, so people that have like enzyme issues, digestion and issues, they take Creon. You take it with meals. So that's a big one that people take for helping like digest, enzymes and everything. Let's see, what else do they have? I don't really want to go over, inhalation medications, effexors for people that kind of have mood issues and everything. And unfortunately, with mental health and biochemical issues, people they need to take these type of medications. So that is a popular medication for people, and it works. These medications work. Celebrex works. Xanax is an anti-anxiety. People take that as a not even as an anti-anxiety medication, but as a sleep aid. So I just wanted to briefly go over these guys real quick. And I'll jump to their dividend history. I'm not going to go over revenue because these guys are kind of new. It's hard to really study the trends of these guys. I'll just do a small review on them revenue wise. So here's their quarterly financials. This is in December 2020, 3.62 billion. Then it was 4.43 billion. Then it was 4.58 billion. And then September is 4.54. So you're seeing an increase in revenue. I do see these medications being in demand. The Mylan merging with Upjohn, and Pfizer's off-patient medication division, basically form Viatris. So these guys are high in demand as a pharmaceutical company, and I'll go over their dividend history. It's a good dividend hike. They're kind of the new kids on the block. They have a 2.99% dividend yield, annualized dividend of 44 cents, but they have products that are in demand, and people need those medications. So they're not going anywhere. They're just going to go up. They're not going to go down. I could see those guys. I mean, gosh, I can't even tell you how many med passes I've done just with those medications. So, I mean, I can tell you by heart why people need these. And I didn't want to go too much into detail, but that's kind of the medications that these guys bring to the table. Let's jump to the next dividend stock. And that next dividend stock is Enterprise Product Partners. It's sitting at 23.56. Previous close was 23.40. Day range was 23.09 to 23.70. Its year range is 20.03 to 25.69. Its market cap is 51.06 billion US dollars. Its volume is 7.19 million. The PE ratio is 13.28. Dividend yield is 7.89%. What really excites me about these guys, and I have them on my radar for sure, is their new dividend hike they had. So this is brand new pretty much. Enterprise Product Partners announced that its board of directors increased its cash distribution fourth quarter 2021 to 46.5 cents per unit. The cash distribution suggests a 3.3% hike from the previous dividend of 45 cents. So the big thing is with energy and stuff, we need to know what these guys carry. So I'll go over that with you. These guys have grown since their IPO in 1998, increasing its asset base from 7.15 million to 64 billion as of December 31st, 2020. Phenomenal growth is a result of expansions from organic growth opportunities as well as acquisitions. Listed below are their current portfolio of assets. 50,000 miles of natural gas, NGL, crude oil, refined products, and petrochemical pipelines. Storage, 260 million barrels, refined products of crude oil storage capacity. Natural gas processing, 22 natural gas processing plants. Fractionation, 23 NGL and propylene fractionators. So this is what makes them very interesting, and they bring a lot to the table because there is a demand for these guys. I know you want to say oil and this and that. They are well diversified, and I find that very special about these guys as a company. I'll go over their revenue real quick. They're 47,000, 2015, 27,000, 2016, 23,000, 29,000, 36, 32, 27. So here's the thing. They are pretty cheap. I like their dividend history, which I'll reveal to you. But the revenue, I want to see it increase a little bit before I pull the trigger on them because they're in the 27s, 29s. They went down. That's totally understandable. I want to see how they do actually their total revenue in 2021 and a little bit of their trends and how they're doing. But it's an extremely attractive dividend stock, and I'll show you its dividend history. So 2011, it was 60, 61, 62, 69, 72. Wait a second. What happened here? It went down from 72 to 36, 37, 39, 41, 42, 45. So it went, we'll figure this out. It went from 60 cents to 45 cents. So you notice a significant drop. It hit 72 cents, and all of a sudden it dropped. I wonder why it went to 36 cents. And now it's to 45. So you see a pretty good growth from 2014 to 2021, especially during a pandemic. But here's the thing that makes these guys very interesting. And this is what has them on my radar. They have a stock split history. So in 2014, they had a 2-for-1 split. In 2002, they had a 2-for-1 split. It's going to take a little bit of time if you notice their price per share and everything. But that is promising. I mean, they generate a ton of money, which make these guys very attractive. I'm sure a lot of you guys own them. I'm considering buying it. I have it on my radar. It's high on my radar. And I'll jump to the next dividend stock. This one really interests me as well. This last one grabbed my interest. Kite Realty Group Trust. KRG is a symbol. Previous close was $21.95. Day range was $21.65 to $21.96. Year range was $14.86 to $23.14. Market cap is $4.79 billion US dollars. Market was 1.55 million. PE ratio 174.66. Dividend yield 3.48%. What are these guys about? Kite Realty Group is a real estate investment trust headquartered in Indianapolis, Indiana, one of the largest publicly traded owners and operators of open-air shopping centers and mixed-use assets. This company's pretty much their grocery-anchored portfolio is located in high-growth, warmer, and cheaper markets and select strategic gateway markets. Combination of necessity-based grocery-anchored neighborhood. Yeah, try saying that when you have COVID. And community centers along with vibrant mixed-use assets makes KRG portfolio an ideal mix for both retailers and consumers. Publicly listed since 2004, KRG has nearly 60 years of experience in developing, constructing, operating real estate using operational investment development and redevelopment expertise. KRG continuously optimizes its portfolio to maximize value and return to shareholders. That's pretty interesting, but we need to study its portfolio. Again, real estate investment trust. I always tell you guys, study the portfolio. And again, this is not financial advice for entertainment purposes only. Disclaimer in the description. FFO is huge. I know some of you guys are on the comment section. FFO is probably the biggest indicator. PE ratios, there can be indicators with a low PE ratio. That's where there's a lot of problems. I made a thing in the comment section regarding it. If you guys would like me to post something that one investor did say, and I do believe this, with a extremely low PE ratio, it can raise red flags, but FFO is the biggest thing. But let's check out these properties. Here's the thing. These guys are pretty big. And, here's some plazas that they're located in. And a lot of the plazas that they have are pretty solid. I mean, I'll just give you an example of what they bring to them. So here's Arcadia Village right here. And their spaces are not very... I mean, this is what they carry. CVS Pharmacy, a foot spa. I mean, they're pretty occupied, which I think is really interesting. Orange Theory is really good. I mean, that's a fitness center. They seem to get the right type of customers or companies to pay rent. So here's the fresh market that they have, and their spaces are pretty good. I'll do one more. Just do this Avondale Plaza in Washington. They're very transparent about everything. Garlic, gyms, pizza, tips and toes, nails. So this dentistry. So they're pretty well organized, and I think they know what they're doing as a company. And I'll show you how much revenue they're generating. So this is millions US dollars. 259, 347, 354, 358, 354. That's fine. 315, and then it went to 266. You can blame the pandemic for everything and businesses shutting down and all that. I see these guys rebounding pretty strong. And I'll show you their dividend history. Look at this. 27 cents, 28 cents, 30, 31. And obviously you can tell the pandemic hit and boom. But they're making a pretty fast comeback right now. So they went from 8 cents to 19 cents. It's going to take probably a year or two to get back to 31 cents. But they're making a comeback. So I just want you guys to be aware with these dividend hikes and these guys making a comeback, especially this one. So it has a dividend yield of 3.46%, annualized dividend of 76 cents, and it's sitting at 21.86. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Darth Dividend. You guys have a good one. I will post a video tomorrow. Let me know what you think of KRG, EPD, and VTRS. I'll see you guys in the comment section. Have a good night.